Hello and welcome to Business Incorporated on Channels Television. I'm Ini John Mekwa. Coming up on the show today.
May there be peace in the West.
The Economic Community of West African States to reduce its membership from 15 to 7. Ghana and Rwanda partner to establish chocolate production plants. And Egypt's central bank to issue 18.5 billion Egyptian pound in treasury bills for budget financing. Well, before we give you the details of those stories, here are the intraday market numbers first. In Africa, let's start off with Kenya, where the market closed negative on Friday. The all-share index lost 0.63%, but at intraday it was mostly positive except for South Africa's JSE, which shed 0.11% of its all-share index. EJX 30 of Egypt was doing great at intraday, up more than 2%, while Nigeria's NGX was also up with just 0.09%. Over in the Middle East, it was mostly negative sentiments during trading at intraday. The highest reduction recorded was in Abu Dhabi, which was down 0.50%. Qatar index was also down 0.21%, while Dubai lost 0.10%. The only positive at intraday in the Middle East was Saudi Arabia, which added over 50% to its all-share index. And in Europe, stocks retreated this morning following jitters in global markets over the more hawkish tone from the U.S. Federal Reserve last week. Conrad has more from the region. He joins us from Frankfurt. Hello, Conrad. Good afternoon.
Good afternoon, Ini. Thanks for having me back on Channels TV.
You're welcome. Well, with this perspective of the U.S. Fed on interest rate, what about the European Central Bank? How likely is it that it will follow this Federal Reserve and tighten its monetary policy?
Well, you know, the economic recovery right now here in Western Europe is weaker than in the United States. So at least for now, investors don't have reason to get nervous about potentially stricter monetary policies here in Europe. A lot will depend on the European Union's COVID recovery fund. It's called Next Generation EU. Up to 800 billion euros are to be spent on infrastructure, digitalization, modernization, on new jobs and many more things. The amount, of course, is huge, but it's absolutely not a given whether the national governments, the member countries of the European Union, will really spend the money wisely and whether they will combine the spending with reforms of, for example, national labor markets or, generally speaking, the way how money is spent on social benefits. This has to be combined. This has to happen too. And there's a lot of discussion about this right now in the European Union. And if things don't go according to plan, the economy and the markets here in Europe will depend on cheap money from the central bank for a lot longer.
And over the weekend, the ECB's policymakers, including the president, Christine Lagarde, discussed the strategy of the Reserve Bank. What are the results of those discussions?
Well, not a lot of details have been given out yet. Christine Lagarde herself says that the ECB makes good progress on its new strategy. What the markets are expecting is that the somewhat elusive inflation goal the ECB has, which is currently set at below but close to 2%, will be handled a bit more flexibly in the future, so that the European Central Bank can continue a very generous monetary policy, even with inflation rates rising slightly above 2%. What's also an expectation is that the ECB is going to incorporate climate change goals in its decision-making, for example, by designing its bond purchases to favor companies who have a lower carbon footprint or who are working on such a lower carbon footprint.
So good news from the aviation sector. Europe's air traffic has reached 50% of 2019 as recovery continues. Any hope when full revival will be in?
Well, there's still a long way to go. Eurocontrol, which is the European Organization for the Safety of Air Navigation, says air traffic in Europe is only set to reach 79% of the level of 2019 by the end of this year. And of course, autumn and winter will reanimate COVID-19, maybe with new variants of the virus. So every prediction is to be taken with a grain of salt. But of course, that said, today's news is positive for the airlines, not only for them, also for refineries who've seen demand for aviation fuel collapse. But in April, for example, consumption of jet fuel and of kerosene in Europe was up 74% compared to last year. So the recovery is definitely happening, and it's happening quickly.
Yeah, well, we hope nothing sets it back, and we hope it comes on real good. Thank you so much, Conrad, and enjoy the rest of your day. We're moving over now to London, where it's not so good, but Juliana is here to fill us in from our studios there in London. Hello, Juliana. Good afternoon.
Good afternoon, Ine.
Yeah, well, I can say you're not so happy this morning. I mean, this afternoon, UK has reported over 9,000 COVID cases, 6 deaths. On the day before it was supposed to be Freedom Day, what's the market's reaction to this?
Yeah, it's not great. As you said, it's pretty grey in London at the moment. And of course, today was supposed to be Freedom Day. We're supposed to be able to rip off our face masks and live just as we were living pre-pandemic. Of course, that isn't the case. And unfortunately, we've still got rising COVID case numbers. Yesterday, as you said, a further 6 deaths, over 9,000 positive cases. The day before, there were 14 deaths and over 10,000 COVID cases. But, you know, there are positive numbers to be boastful about. One of them is that 42 million people, almost 43 million people, have had a COVID vaccine. 31 million people have been double vaccinated. That's over 81% of the adult population here in Britain that have received a vaccination. Definitely something Boris Johnson, the Prime Minister's, pretty proud about. Ever since the Delta variant, or the so-called Indian variant, became the dominant strain in the UK, all over 18s are now allowed to have a vaccine, which is great. I believe on Sunday, about 700,000 over 18s registered. So it does appear as if it's going well, according to one expert as well. If the numbers that we're seeing continue to take up one of these COVID vaccinations, and Freedom Day could even be earlier than the 21st of July, which is the number that's been dotted around at the moment. The FTSE started off in dismal territory. It's moved up slightly above 7,000 points, still going amongst that global sentiment about the hawkish tone we received from the Federal Reserve last week. But let's have a look at those numbers. At intraday, the FTSE All-Share is unchanged. The FTSE 100 is up by 0.17%, and the FTSE 250 is down by 0.28%. In the currencies market, the British pound is up on the US dollar by 0.54%, up on the euro by 0.31%, and up on the Japanese yen by 0.45%.
And stamp duty tax breaks and increased demand has continued to cause a boom in the housing sector. Do we see this waning anytime soon?
Well, yes and no. I suppose it depends really on what happens when the furlough scheme comes to an end and when all of these tax subsidies that the government have been putting on are pulled apart. But, you know, Andy Haldane, the outgoing chief economist of the Bank of England, he said the property market is on fire, and that's what all the data is showing. The latest data comes from Rightmove, which is very popular property listing website. They've been giving out the figures for June, showing that house prices rose 0.8%. This is the biggest rise in June that they've seen since 2015. A lot of this as well has got to do with low interest rate, 0.1% at the moment. If you're buying a property that's less than £500,000, you don't have to pay stamp duty, which was a big issue for lots of first-time buyers. And Boris Johnson said that this one nation Conservative government wants to turn generation rent into generation buy. So the government are happy. It is still very expensive to buy a property. I believe now it's about £258,000 outside of London. The average cost of a home in London is over £450,000. So great if you can afford it, not great if you can't afford it. But is the bubble about to burst? That's a massive question that economists are mulling over at the moment.
Yeah, well, we'll wait for their reply and their response to that. And new flexible rail season tickets went on sale in England from today. This government scheme tries to cater to workers splitting their time between their home and office amid the coronavirus pandemic. How will this help with this new wave, that UK is dealing with?
Well, it depends on who you ask, Innie. Some it's good, for some it doesn't go far enough. Hybrid working has become a real thing recently. As there are some CEOs, some big names trying to encourage people back into the office, some people pretty comfortable working from home, which is why the government have launched this new kind of hybrid commuter travel scheme for people that are doing just that. The only issue is you can only use 8 days. So in a month, you can pick whichever 8 days you want. According to the government, it can save passengers between 40 to 60% a year. But that means if you're lucky enough, you can work 1 or 2 days from home. A lot of the union bosses and the critics are saying nobody's going to be working just that little amount of home. The difference between this and a seasonal ticket is if you've got a seasonal ticket, you can travel whatever time and whichever day. So it's seen as a good thing. As you said, it's part of a much wider government plan. The railway network is going to be rebranded Great British Railways in 2023. It's a part of a long-running conversation, but it's really started to take shape when the government basically took over rail networks during the COVID pandemic because 98% of passengers were not travelling. And that's where the rail networks were getting their money from, all of these pretty high passenger fares. So, yes, you can use it from Monday, 8 days a month. A new system. We'll just have to wait and see whether or not people buy it.
Yeah, well, they call it flexible, so we'll see how flexible it gets to suit the needs of the people. Thank you so much, Juliana, and enjoy the rest of your day.
Thank you.
So, shares in Asia Pacific dropped today as Japan's market plummeted. Meanwhile, China kept its benchmark lending rate unchanged. Japanese stocks led losses regionally, with Nikkei 225 falling 4% in early trade. It later pared some of those losses, but still closed 3.29% lower at 28,010.93. The Topix index shed 2.42% to finish its trading day at 1,089.45. Losses were seen in most sectors in Japan, with shares of automakers such as Nissan and Honda falling for over 4% respectively. Elsewhere in Asia Pacific, Hong Kong's Hang Seng index dropped 1.28% as of its final hour of trading. Mainland Chinese stocks closed higher as the Shanghai Composite rose 0.12% to 3,529.18, and the Shenzhen Component edged 0.39% higher to 14,641.29. South Korea's Kospi declined 0.83% on the day to 3,240.79. Shares in Australia slipped, with S&P AX 200 shedding 1.81% to close at 7,235.30. MCI's Broadex Index of Asia-Pacific shares outside Japan fell 1.29%. Stock futures recovered in early morning trading after the Dow posted its worst week since October. Futures on the Dow Industrial Jones average dropped to 07 points. S&P 500 futures and Nasdaq 100 futures both also traded in positive territory. U.S. stocks fell on Friday as investors digested new economic projections from the Federal Reserve and worried rate hikes could come sooner than expected. The Dow dropped 3.5% last week, while the S&P 500 and Nasdaq dipped 1.9% and 0.2% respectively. Sectors tied to the economic recovery led last week's dip. The S&P 500 financials and materials sector lost more than 6% on the week, while energy fell more than 5% and industrial dropped more than 3%. Oil prices notched up today, underpinned by strong demand during the summer driving season and a pause in talks to revive Iran nuclear deal that could indicate a delay in resumption of supplies from the OPEC producer. Brent crude futures for August gained 0.4% to $73.81 a barrel, while U.S. West Texas Intermediate crude for July was at $71.96 a barrel, up 32 cents. Both benchmarks gained for the past 4 weeks, and optimism over the pace of global vaccinations and a pickup in summer travel. The rebound has already pushed up sports premiums for crude in Asia and Europe to multi-month highs. Negotiations to revive the Iran nuclear deal took a pause on Sunday after hardline George won Iran's presidential election amid a low turnout on Saturday. We'll take a break now. When we come back, we head to the African continent where a lot is happening with ECOWAS, and we'll tell you about it after the break. Just stay with us. You're welcome back. You're still watching Business Incorporated on Channels Television. The Economic Community of West African States, ECOWAS, will from March 2022 reduce its current 15-member commission to 7. The decision, which was taken at the end of the 59th ordinary session of the ECOWAS Authority of Heads of State and Government in Accra, Ghana, is aimed at cutting down costs. The new 7-member structure commission, which takes effect from March 2022, will consist of the President, the Vice President, and 5 other commissioners. The Accra meeting adopted the reconstituted ECOWAS Council for the Wise Preventive Diplomacy with Dr. Goodluck Jonathan, a former Nigerian president, as the chairman. The reconstituted council consists of 30 members, 2 from each of the 15 member states of ECOWAS. And still staying with ECOWAS, an ambitious plan for 15 West African countries to adopt a common currency has been pushed back to 2027. The ECO, meant to have been launched last year, was delayed by COVID-19 and its aftershocks. According to ECOWAS, there's a new roadmap and the new convergence plan that will cover the period of 2022 to 2026. The West African bloc has been pursuing a common currency project for more than 2 decades now to help remove trade barriers, ease the cost of doing business, and boost economic growth in a region of more than 380 million people. With the bloc, 8 countries that already share the CFA have already started reforms of their own ahead of the wider currency project. Well, Matt Kindiga, Associate Practice Lead Sub-Saharan Africa at Fronterview in London, joins us now to discuss the implication of this decision. Hello, Matt. Welcome to the show.
Hello, thanks for having me on the show today.
So we know that COVID caused the first setback, which was supposed to be from last year. But now, what's the cause of this, and what does it tell us about the current state of West African economies?
Yes, certainly. Well, as you said, COVID-19 has been very disruptive economically in West Africa. And it is one of the main reasons why this currency project has been delayed. I would not say put on hold, but it's been delayed by a number of years. Although we can look a bit further back, so we can look at the physical positions of West African countries. So well before COVID-19, there was increasing fiscal strain being shown by certain member states of ECOWAS. Cote d'Ivoire was facing a bit of a difficulty, Ghana as well. And so what COVID-19 has done is exacerbate these fiscal pressures. And so this certainly has contributed to this delay, in our opinion. Countries have also been forced to prioritize their post-COVID recoveries. So this has meant focus on or attention on introducing the new currency has not been a top political priority. But there's also it's becoming increasingly clear that many West African countries are operating at different speeds. So what the new currency requires is quite close convergence in terms of monetary environment, so inflation, currency stability, as well as physical stability. And we are quite far away from that. So it's quite clear that several economies are performing very well, whereas others are not performing as well as those. So this is also one of the reasons for the delay, in our opinion.
Yeah, well, like you noted, the economies are operating in different speed. So, and then the issue of vaccination is still there. So how realistic is this revised timetable of it being, introduced in 2027?
Yeah, so I would say it is more realistic than the previous one, which has now been abandoned. And I would say that the introduction of a common currency across ECOWAS, which includes Nigeria and Ghana, is more likely. And this is because, we are seeing more aligned or more sort of harmonized announcements amongst ECOWAS members about their intentions for the currency. But I would say 2027 is it's not impossible, but it's not very likely at the moment. And this is because, as I've mentioned, there needs to be very considerable convergence amongst member states in terms of their fiscal parameters. We also need to have much lower inflation in markets like Nigeria and Ghana. And also there needs to be a unified political appetite amongst ECOWAS states to push forward with the currency. So CFA franc member states at the moment are used to having a common currency. It's part and parcel of daily life. Politically, it is accepted, but it will be a very bold political move for Ghana and Nigeria to become members of this common currency. So certainly there is quite a lot that needs to be done before for the 2027 deadline to be met.
Yeah. And what can businesses expect over the next 5 years as the introduction of ECO approaches?
Well, if we assume that the currency is implemented as planned in 2027, so if we just take that as an assumption, then businesses could expect to see a lot of movement in terms of policy announcements, policy changes, as part of the preparation for the currency being introduced, and these would occur almost immediately. So, in reality, this probably is not going to happen straight away. So, what countries should expect to see is a continuation of the status quo, really. So we're going to see, currency volatility in countries like Ghana, although we are expecting some improved currency stability over the next couple of years as the economy improves. We will continue to have FX shortages to an extent in Nigeria, with potentially a depreciation over the next couple of years, and then really the status quo in the CFA franc region. So what this all means is that companies should still expect to see very different currency regimes across West Africa until the eco currency is introduced, potentially within the next 5 to 10 years.
All right. Well, we look forward to that. Thank you so much, Matt, and enjoy the rest of your day.
Thanks very much.
So moving on now, Ghana is collaborating to establish a chocolate production plant in Rwanda to boost trade and investment between the two countries. As part of the partnership, Ghana will supply processed organic cocoa in a form of cocoa nibs or cocoa liquor, as shall be determined. Rwanda will also establish a formulation plant in Ghana for the production of organic pesticide for crop protection, veterinary use, and public health. This will help to cut on transportation costs and bring affordable organic products closer to Ghanaian farmers. The Central Bank of Egypt, on behalf of the Ministry of Finance, is set to issue 18.5 billion Egyptian pound in treasury bills. The T-bills were offered in 2 installments, with the first valued at 11 billion Egyptian pound with a 91-day term, and the second worth 7.5 billion Egyptian pound with a 273-day term. But the current fiscal year, the budget deficit is estimated to record 6.3% of the gross domestic product, planned by the ministry to be financed through treasury bills and bonds and through international and Arab loans. Meanwhile, the Minister of Trade and Industry has announced that the country's non-oil exports recorded a significant increase of 19% in the first 5 months of 2021. They reached $12.32 billion during this time period, compared to approximately $10.37 billion in the same period last year. And that's it on the program. Thank you so much for watching Business Incorporated. I'm Ini John Mekwa.